Hey guys, today is November 27. Looking at the SPY on my chart, it looks like it's the mini ES 5//MES. I'm a futures trader, and therefore you'll see that on my chart a lot. I'm just looking over the markets, seeing what we've been doing, and seeing where we are, and doing an overview before we get into the market open, right? Okay, let's start with the big picture. So right now we're on the weekly chart, and we can see we've been just kind of pumping up for the last we've been pumping up for 1, 2, 3, 4 last 4 weeks. And so we're gonna, we're gonna assume that the market is going to continue this upward momentum. And the first thing we're gonna do is just kind of make some markups here. So I like to kind of draw this line here, telling me this is the end of last week, and it was kind of an up week. We hit this resistance up here at 4055 and backed off, but we didn't really go much lower than the previous week low. All right, so it looks like those lows, we should denote that like that. Okay, that's the previous week high. I'm sorry, that's not the previous week high. This is the previous week high, and this is the previous week low right here. Okay, but you can see we're still in this range. We're still in this week's range. We haven't really broken out above that range, right? I'm expecting that, but so far that's kind of where we are. So we have a upward moving market. We have in our previous week high, which is pretty much the same as last week, and we have our lows from last week and the week before, which are kind of right next door to each other. So we are going to make another time level denoting that this was the end of last week. I'm going to take this one off. And so that is our range we're dealing with. We're dealing with 4059 to 3938 or 3913. So pretty much a 100 point range, 130 point range or so. All right, let's go down to our 4 hour. And you can see that the CCI, I like to use the CCI as a momentum indicator. We're swinging up, and that's pretty obvious. We're coming from these lows here where the CCI was oversold at -156, and now we're moving up. CCI is 73 on a weekly basis. All right, let's go down to our daily chart. Okay, so on the daily chart, we can see that we are in a daily range here, right? The previous day, that would have been the 23rd. And so what I like to do with daily ranges is just highlight those, or I might grab the Fibonacci retracement tool and get the low off of that previous day. Let's grab that low, and we're going to go to the most recent high like that. Okay, so I'm grabbing this low and taking that to the next day's high. All right, and you can see also on this chart, you can see that our moving averages, we're pressing up on that 200 period moving average. Now that suggests that the market should start moving back down. It should, but right now, okay, and this is what confuses. Let me just stop here and take a minute. This is what confused me for a long time, is that yes, There's obviously resistance at this level. Yes, this is the 200 period moving average, and price should bust through it, but everything on this time frame is telling me that the market is still making higher highs. Okay, and when we go down to the lower time frame, you still don't have a reason to just automatically short the market yet, and I'll show you why. Okay, so this is that day. Let's just do our time marker there. All right, and what we're doing here with the Fibonacci tool, let's expand that. Okay, what we're doing here is we're taking the high from 1123 and the low from that 1125 high to 1123 low, and we're just taking our fib tool, saying this is the 100% pullback, and this is the most recent high. Okay, so you can kind of see that after this day, what did the market do? It made another high, but it pulled back about 50% into that 1123 range. And our assumption going in is going to be that this range is going to continue to hold. Okay, meaning the market will continue. It could go all the way down here. It could go to 68%, but our assumption is it's going to hold as support and then eventually continue up to make a higher high. Okay, that's our kind of a model of operation. All right. Now, as we go down to the smaller time frame, you're gonna see this picture only on a granular level, right? So let's look at it on the 4-hour. Okay, and you can also, I like to look at volume on these levels, like where did the market really push? Okay, so you can see here, 1300, we pushed higher, right? Pushed higher at this 1300 candle. So what I like to do is just highlight those areas like this, highlight that, because I know there's a lot of volume going on in there, so I'll just highlight that. And typically those areas act like, it's almost like a springboard. Like it'll press higher, then come back into, to the higher volume area, then make a higher high, go on and make a higher high. All right, so let's move down to the 1 hour or the 30-minute chart. And this is where you start to see the story, only on a much more granular level. Like, okay, previous day, this was the 1123 period. We put in a high and we pulled back to the 50% level. All right. Look at where our moving averages are. Our 200 is below the 100. That's telling us that prices in general over the last 200 hours are moving higher. Okay. So this is a pretty decent, Friday we didn't have up movement, but when the market moved to this level, that's where I got in. That's pretty good pullback level. I am buying there and hoping to get out at an exhaustion point tomorrow. When the market, say, is high volume, like tomorrow, usually the volume comes in around 9, 10, 11, 12, and you see these huge, spiking moves like these, okay? Like these kind of moves, right? So I'm trying to get out on a candle like that, I'm trying to get out on the candle like that, because most likely after that happens, the market capitulates. It just kind of dies out. So I'm trying to get in on a capitulation. Okay, like yesterday, there was a little bit of volume. Okay, a little bit of volume there. Not a lot. But if that were a big spiking red candle, that's where you get in. You don't get scared there. That's your opportunity, because most likely when it spikes on high volume, that movement is going to capitulate. It's going to die out. So you want to get in when the other team is getting weak, okay? Because that's when the bulls are going to come in and invade this sucker. Okay, that's when they're going to buy in. But this was a good entry. Now, what am I looking for? I'm looking for a big red green candle like this. Okay, I'm looking for that. I'm anticipating that happening around 9, 10, 11 tomorrow. Is it gonna happen? Am I predicting that? No, I'm not predicting. I'm just kind of like, I think of it almost like a surfer. Like a surfer, when he's riding that wave, he's not, is he predicting, or more so like kind of anticipating? He's more so anticipating. He can't predict nature. He can't say that when the wave is going to collapse. Okay? He can't say when the wave is going to collapse. He is riding the wave in the present moment. And based on all his experience and his, his previous rides. Okay, I like this analogy. He's able to anticipate the movement of what's going to happen next. Right? He can't determine exactly, he can never know exactly when this wave is going to crash on him. He can't do that. So what he's using his skill, he's using his knowledge to anticipate what's going to happen in the next few moments, right? So when you're playing this game, think of it almost like that. Like it's like you're a surfer in a way, and you are you're not predicting like, oh, the price is going to go here. No, you're looking at what's happening right now in the current moment, trying to get in a good position, and then you're trying to get out when the market reaches a certain level, when it's, when the movement is about to be faded or is about to be over with. So that's kind of how I was taught, and the guy that taught me was, a monster at this thing. And another thing you want to do is, okay, like see here, 11:23. This was our movement. We made a new high. Overnight, market pulled back. Okay, that's your entry points on those pullbacks, right? 50% level, 30% level. You don't want to get in when up here. You want to get in here. And, again, I like to look at volume. I got in here, but I got in knowing that there wasn't a lot of volume at the time. I just got in here because it was a good area to get in. It was the 50% pullback, meaning market made a move and then it pulled back 50%. Into a high volume area. And you saw how I drew out the volume. I'm going to the 4 hour, and I'm looking at those areas where the market made higher highs or lower lows on high volume. So see here, high volume, high volume, high volume. All this is low volume. Typically, the market doesn't make a lot of huge moves overnight, right? So what we want to see is this happen. We're anticipating this happening over next 1 or 2 days on high volume. And that's our exit. That will be our exit point. Do I have a target? No, I don't have targets. I just go with it, because sometimes what I found is that many times when I try to anticipate or predict what's going to happen, I lose out on an opportunity. Like, it might be a huge move that happens within this time frame. And then you just kind of like, man, you took off half the profit when you could have had more. It's like a time thing in here that I can't really explain it, but it's a lot to do with time and rhythm. Time and rhythm. Okay. So that's our plan. I'm in here. I got the simulated account on here, but that's, probably tomorrow or Tuesday when I pop out, I'll review this setup again. And I took off a lot of the other stuff I use, like the pivots, and I just want to simplify it a little more. CCI is the indicator I use as the oscillator. You can use fast stochastics if that is more visually appealing. They're very correlated, meaning they pretty much, they're oversold and overbought at the same points. If I went in and put on the fast stochastic, wait a minute. Here we go. So if I went in and put on a fast stochastic, see, it's, when this happens, when both the fast and the slow get oversold, that's when you're looking up at the chart and seeing, where am I? Am I deep in that volatility area, deep in the volume area, 50%, 38%, 60%? Yes, that's a good buy. All right, now on the opposite end, tomorrow, when the volume comes in, if this happens, you're kind of doing the same thing. Am I overbought? Yes. Am I exiting on high? Like, this is a high volume spike right here, right? That would have been a great exit point if you had gotten in earlier. Like, if you had gotten in, say, here, right here. See, market was switching over here, tried to sell off. That was your entry. Stop below the low, and then you're looking to exit on a high volume spike like that. It would have been a great one. Like, you probably been risking 40 ticks, 40, 50 ticks, and pop out with 50 ticks. So that's a 1-to-1. Now, if you waited and you're getting out here or here, it's higher than that. But that takes days. So that's our plan going into Monday. I had on, in terms of option hybrids, I had on a hybrid, and I just didn't adjust it fast enough. But this is a combination strategy of a butterfly, a calendar, a condor, all in one, right? So you can see how great the Greeks are here. I mean, look at you're bringing in 900 theta every day with very little vega risk. But the problem here was that I didn't adjust. So it's a losing position right now. If I were playing with real money, probably would have adjusted by now. But it's an option trade gone bad. Tomorrow we'll take it off and start this again. All right, guys. Also, I have a newsletter I'm getting. I'm starting to get a little group interest here. So if you want, I will include the link to the group in the description, and you can log in and see us. Take care.